The Future Homeowner Show.
Hello and welcome to the Future Homeowners Show. I am your host, Eric Helon, and we have a great episode planned today as we cover some of the latest articles as to what's going on in the industry. We're going to take a deep dive on a particular program that is out there for a special few buyers, if you would, and we'll dive into that. And then I'm going to answer a couple questions that we received from other first-time home buyers. So hopefully these are questions that maybe you've had or thought about, and I can answer them for you. So what we're going to do first and foremost is jump into the pulse of the market. Let's look at what's going on in the industry and talk about a couple articles.
Pulse of the market, what's moving out? Pulse of the market, we'll show you how. Rates in the money, inventory low, hot homes get picked before they even show. Neighborhood numbers count every trend. We reg the signs and explain the end.
All right, so I want to talk about a couple of articles that I read recently and how they may impact you as a first-time home buyer. The first one here is from Realtor.com, and really what it was talking about was the areas that are still slashing home prices. So if you're not familiar, listing prices are dropping in a lot of different areas throughout the country. And the reason for that is because they're seeing slower movement. Not a lot of buyers are, buying in their area. Interest rates are a little bit higher, and there's a lot of uncertainty even in like the job market or economy. So we are seeing a slower market than usual. And so we see sellers start to make price adjustments and start to cut prices. So that process or that trend is actually slowing down for the majority of the country. But there are still a few areas that are seeing this increase. So if you're in one of these areas, maybe an opportunity for you as a buyer to go in and be a little bit more aggressive in your offers, especially when you're working with your agent and trying to figure out how to strengthen your offer, and getting maybe some concessions back. And concessions could be like money for your closing costs or to buy down your interest rate, things of that nature. So there are still opportunities in some of these cities. And the 5 major metropolitan areas that they mentioned in this article were Phoenix, Tampa Bay or Tampa, Florida, San Antonio, Denver, and Portland. And so these are still some of the highest price adjusted areas. So nearly 1/3 of all listings are getting price reductions in Phoenix. About 1/4 of the listings in Tampa are. Same for San Antonio. Denver's at 24%, and Portland, Oregon is at 24%. So listings that are on the market and they're sitting, they are seeing some price adjustments still happening in these major metropolitan areas. Now, I mentioned that we're not really seeing it in other areas that's starting to slow down nationally. And the reason for that is that sellers are becoming aware of what's going on in the economy, what's going on in the stability of the market in their neighborhoods. And hopefully they're getting some good advice from their listing agents to keep into consideration price versus, sometimes you want a higher price, but the reality is the market may be struggling in your area. Homes aren't moving as fast. And so you need to make your offer price, your list price accordingly. And so we are seeing that sellers are being more realistic in their listing prices. And also what we're seeing is that sellers are still selling at their listing price, but they're giving the concessions that I mentioned. So they're offering to pay closing costs for the buyer. They're offering to buy down your interest rate as a buyer. And so just because we don't see it as aggressive throughout the rest of the country doesn't mean that these price adjustments aren't happening. So, there's other ways for you to win as a buyer. In the majority of the country, we're still in a buyer's market. You can take advantage of that and getting a solid offer in and getting some concessions to help you make that transition. Especially if you're concerned about today's interest rates and things of that nature, it may be an opportunity for you to get the seller to buy down your interest rate. So there are opportunities there. Talk to your real estate agent before you submit your offer and see what their motivation is, and see what they're willing to do to help you make that purchase. Now, the second article that I came across was actually on Redfin News, and it was talking about the income that's needed in order to buy a home. So good news is the income needed is coming down. The average income to purchase a home that was required was about $88,000, but it had increased up to about $117,000 and even higher recently. So the income had actually peaked at $122,000, which was in the middle of 2025. So what that means is in order to buy a home on average throughout the country, you needed an income of $122,000 household income. It's come down, so we are seeing that it's at $117,000 right now. But again, we're not near that $88,000, which we saw a while back. So yes, it's still expensive to buy. When you're thinking about buying your first place, you have to be financially prepared, and you want to make sure that you're not just living to pay the mortgage. And so when we're looking at and we're tracking housing costs, those housing costs are coming down on an average 30-year fixed rate, about 6.33%. And then the estimated median household income of $88,000 is actually up year over year by 4%. What does that mean? That means that people are making more money than they did last year. That's good. We said about 4%, so we have to take into consideration inflation. So maybe it doesn't feel like that full 4% for you. But incomes are coming up, and the income needed to buy a home is going down. So prices are becoming more affordable. So this is good news. If you want to get more of the details and the numbers, I suggest that you take a look at this article. Great information and research being done. And this is on Redfin's website. This is Redfin News. So those are the two main articles that I wanted to cover today, because I wanted to really talk about not only, the opportunities for buyers in some of these markets where sellers are still making some price reductions, but also the good news that, hey, home prices are coming down. Income is going up, even though it may not quite feel like it. But we are trending in the right direction. And so there's opportunities out there for you as a buyer. So that covers our segment for the pulse of the market. And now let's jump into our deep dive.
Deep dive, go a little deeper. Deep dive, get wiser. Deep dive, deep dive, deep dive, deep dive, deep dive, deep dive, deep dive.
On our deep dive today, I really want to cover a topic because it's May and it's Military Appreciation Month. And I have an opportunity to serve on a board for the VA Rep, which is the Veterans Association of Real Estate Professionals here in the San Diego market. And we talk a lot about the VA home loan benefit. And I wanted to talk about this because it does have a direct impact to first-time homebuyers traditionally. Even though I know you as a listener may or may not qualify for this program, you definitely have to be, you have to be a veteran, active duty, military spouse. I'll talk about some of the qualifications and who can use this loan. But if this doesn't particularly, have impact to you and your home buying journey, share with somebody who may. If you know somebody who's serving in the military, somebody who's a veteran, talk to them about this and make sure that they're utilizing this benefit that they've earned, because I think it's so important that they take advantage of this while it's available to them. And it's a great loan program. It's actually one of the best loan programs in America, and I'm going to talk about why that is. But today we're going to be breaking down the basics of the VA home loan and how to take advantage of this benefit. So if you're not familiar with the VA home loan, it is backed by the Veteran Affairs Department. Now, they're not the direct lender on this loan program. It still goes through approved lenders who are approved to do this program, the VA home loan. And so it does have to go through an approved lender. If you're not familiar with the lender in your area who does VA home loans, reach out to us. We can connect you with somebody. But again, it's not directly coming from the VA. They're basically giving an insurance to the lender saying, hey, if something goes wrong and this veteran borrower, active duty borrower doesn't fulfill the 30-year loan that they're taking, we have insurance that'll protect you, and it's a 25% insurance that they give to the lender in case you default as a borrower. So it was designed to help military families get into home ownership and avoid some of the barriers, especially when it comes to down payment and closing costs. So there's no down payment required for the VA home loan. So 0%. That's why it's one of the best in the nation. And so that is great. But also on top of that, there's no private mortgage insurance. So typically, if you were buying, say, with an FHA loan and you're paying 3.5% down, there's going to be mortgage insurance on top of that, which is an additional cost every month because there needs to be some insurance and protection for the loan for the lender in case you default. And so with the VA home loan, it is the insurance that they're providing to the lender. So there's no additional insurance needed, no private mortgage insurance. So you're not paying additional costs every month, which is great. Also, because you're considered a lower risk to the lender, your rates will actually be better than what traditional market rates are. So again, lower risk, you get an increase, a better rate. And so that's going to give you a better opportunity to buy more home or make that home more affordable to you on a monthly basis. So those are great benefits. No money down, no mortgage insurance, and you're going to have very competitive low rates to help you get into that first home. So it's not necessarily free money. You still have to qualify for this. And that's why you want to talk to a loan officer about it, because they're going to look at your income and your credit and things of that nature as well. But when they look at your credit, they're going to look at it different. So the Veteran Affairs on this VA home loan program actually doesn't have a credit requirement. So I often get asked, well, what does my credit score need to be in order to qualify for the VA home loan? The answer is it depends on your lender. So depending on the lender, they have what are called overlays. Typical overlay is a 620 credit score. That's not coming from the Veteran Affairs. That's coming from the lender. Some lenders do approve you on a lower credit score. So, have that conversation with your loan officer and find out, hey, what's the credit that I need in order to buy? But whatever it's going to be an overlay. It's not coming from the VA themselves. So who can utilize this VA home loan benefit? I talked about veterans, of course, it was created for them, but also, your active duty military. So you have to serve for about 3 to 6 months, depending on the program, depending on the branch of military. If you're in the reserves, it's longer. But you have to be, if you're active duty, you have to serve for a minimum amount of time before you can qualify. Also, I mentioned reserves, National Guard is approved, all branches, and then also surviving spouses. So I have a client whose husband had passed away. He served in the Air Force, and she's looking to use the VA home loan benefit because he earned it with his military service, and she sacrificed as a military spouse, and so she can still utilize this program. So there are surviving spouse situations where you can utilize this program as well. What you're going to need is a certificate of eligibility, and your loan officer should pull that for you. Now, there's rumors that loan officers are charging a fee to pull this, which is crazy. So if your loan officer says, hey, we're going to pull it's called a COE, we're going to pull that and see if you're qualified for this program, but it's going to cost you some money, that's a red flag. So talk to another loan officer who doesn't charge to pull your COE. They should not be pulling for that. So, it's a misnomer that this program is only for first-time home buyers. So folks can use this multiple times. You're going to receive an entitlement amount based on your location of how much you can actually use. So let's say you're active duty, you're in the state of Virginia, and you get an entitlement amount of a certain amount. Now, let's say 2-3 years down the road, your PCS, you're having to move to California, you're coming to San Diego. That entitlement is going to go up because home prices are more more expensive in this area. And so you're going to actually have an increase in that entitlement. You can utilize your VA home loan again. And so you can keep the home in Virginia. You don't have to sell it in order to utilize your VA home loan benefit. So that is a benefit because everywhere you move and everywhere you're stationed, you could be purchasing a property potentially and building up some generational wealth. So great opportunity for you, for your service as a benefit, like I mentioned, that you earned. And unfortunately, what we're seeing is that not a lot of people are actually utilizing this. So we have a couple issues in the market. I've been in this business for 20 years, and what we typically hear about VA home loans is that, they're more difficult to do, or, they have these other guidelines that are necessary. And so sometimes if you're talking to a loan officer who's not really strong with VA home loans, they're going to try to steer you into a different program, a FHA program or something of the sort. And so you have to be mindful of that. Know what those payments are. Let them do a comparison and a breakdown of if you were to use FHA versus VA. And so you get a true understanding of what those costs are and how it can actually save you money. So, and I bring that up because again, that's part of the industry issue where we're kind of, loan officers are steering people away, or listing agents are saying they don't necessarily want to accept a VA home loan because of other issues. But we've been educating the industry. The VA home loan has gotten so much easier and things have become so much more streamlined that now people should be utilizing this program even more so today than they have in the past. Unfortunately, when we look at the statistics, the usage of this program for folks who are eligible to use it is still in the teens, like 12, 13% that actually use it. And so we want to, bring that up. Obviously, it's a great program. It's a great opportunity for you as a first-time home buyer if you qualified to, utilize this benefit. So, education is important. We're one of the other issues that we're running into is that folks just don't know about it, or they hear about it late in their military career. You can utilize this very early, when you've gotten into the military, and utilize it multiple times throughout your career. So the earlier you find out about it, the earlier you use it, the more opportunities you have to build generational wealth and, purchase multiple properties if you choose to. And so there's going to be other opportunities, investment opportunities, things that you can do over the life of your career the earlier you hear about it. So we got to do a better job of educating folks, and that's why I'm talking about it here today. Now, one thing to keep in consideration is that when you're utilizing this program, it does have to be owner occupied. And what that means is you have to say that you're living in the home. You cannot use this program on a commercial property. You can't use it as an investment property. You have to be living in the home. And so that is something to consider. Now, as I mentioned, you can use the program in one state, and then when you get stationed somewhere else, you utilize it again there because you intended to live in the home in Virginia and you're intending to live in the home in San Diego. And so with that example, you're still utilizing the program for what it was meant to be used for. And you're still using it as an owner occupied borrower. So keep that in mind. So how do you start this process of utilizing this VA home loan benefit? Number one, you're going to talk to a lender who specializes in VA home loans. Don't let them steer you away without at least providing you with a comparison chart of what the cost would be. They're going to pull that COE, Certificate of Eligibility. Don't let them charge you for that. If they talk about that, if they're talking about charging you, go talk to another loan officer. They're going to review your finances. So they're going to see, what your income is. They're also going to look at your credit scores. Like I mentioned, they're going to have an overlay of what they allow as far as the lowest credit score. And they're going to look at your debt to income ratio. So the amount of income in comparison to the amount of debt that you have. Unfortunately, what we see is a lot of folks who enlist in the military go out and buy expensive things, primarily a car, or they buy motorcycles or whatever the case may be, and they start to increase their debt. And so I try to reach out to folks as early as possible and try to prevent that, because if you bring on this debt and your income isn't matching, it's going to disqualify you from being able to use a benefit that you've earned. So buy the home, then the car, so that way you can save yourself on that debt to income ratio. And then they're going to talk about, just starting to get a budget together, looking at your overall finances so you understand exactly how much you can qualify for, what those payments would be, and making sure that you're moving into a home that you can afford. The last thing you want to do is buy a house that's just too much for you. You're living to pay the mortgage, and now you have this financial stress while you're currently serving in the military, whatever case may be. So you don't want to do that. Next, you're going to talk to an actual a real estate agent once your loan officer has given you a pre-approval amount. So now you know your budget, you know what you're looking for, and you're going to work with a real estate agent who is familiar with VA home loan and how to write up an offer based on that. So if you're not already working with the real estate agent, reach out to us. We can connect you with someone who is familiar with VA home loans, so they know how to write an offer, what to look for, how to avoid potential mistakes or roadblocks in the process. So it's very important that you work with professionals who are experienced in working with the VA home loan. And then you're going to, talk about different closing times. So depending on the state that you're in, maybe you're working with escrow, or you're working with a real estate attorney. So, it could take 30 days to close. However, because the VA home loan, like I mentioned, is becoming more and more streamlined, I actually spoke with somebody this week who was closing VA home loans in 10 days. So very fast. So that can actually be a strength to your offer if you're able to close your VA home loan in 10 days. So definitely talk to, the right loan officers, work with the right folks so that you're prepared and ready to go. You don't have to be perfect in order to have these conversations, but this will help you prepare for the process and make sure that you're successful in buying your first home, utilizing the VA home loan benefit. So just to wrap up, as I mentioned, it is one of the strongest programs out there, the best program out there if you're qualified for it. So utilize it if it is available. Most people are not using this program. There's a lack of education. There's a lack of industry push for it. And so we definitely have to correct those things. But if you serve, this benefit, was earned through your service. And that goes for military spouses as well. So, home ownership may actually be closer than you think with this program because there's no money down. You can afford more with a lower interest rate and no mortgage insurance. So even if you're not feeling like you're financially ready, start having the conversations. I encourage you to speak to somebody who specializes in the VA home loans so they can tell you exactly what you need to do in order to qualify and utilize this program before you go out and take on additional debts or even utilize a different first-time homebuyer program that wasn't the best for you. So keep that in mind. I hope that, like I said, I hope you got some information about this program. But if you're not qualified because you didn't serve, or you're not a military spouse or whatever, share it with somebody who may be looking, somebody who may be newly enlisted in the military. Hopefully we can catch them before they make some of the financial mistakes that we see, and they can utilize this program to start building generational wealth throughout their career. That's all I have for this deep dive. We're going to take a second and jump into some of the questions that we received for our question and answer segment called Real Questions, Real Answers.
No more guessing, no more doubt. Real steps, real answers, that's what we're about. Real questions, real answers. Ask it plain. Real questions, real questions.
So we got two questions that I want to cover today. I think they will help a lot of folks, but they're kind of some of the qualifying questions that you ask at the very beginning of the home buying process. And so hopefully you can either relate to these questions or someone who can. The first question I got was, what credit score do I actually need to buy my first home? And we've touched on credit scores quite a bit because this is a major hurdle for a lot of folks. Even if they don't know what their credit scores are or what their credit reports are, they just consider them bad. And so with them thinking, I have bad credit, I can't buy a home, instead of actually looking at your credit report, pulling the credit scores, seeing what those are, and then making sure that that information is accurate. That's how you can really improve your credit faster. So you need to know what's going on first and foremost. Now, when it comes to the minimum credit score allowed, there are programs that allow you to buy with a 500 credit score. Okay. So 500 credit score is probably the lowest that I've seen. However, if you are coming in with enough down payment, some programs may only look at your income and the fact that you're coming in with so much down. So let's say you were buying a house and you had 60 to 70% of the money to put down as a down payment. They're not necessarily going to care about your credit because their idea is you're taking on the risk. If you were to foreclose, you're losing out on all that money that you put up for your down payment. And so they may not consider your credit scores. However, that's not typical. We don't typically work with a lot of first-time home buyers who have an influx of cash like that. And so when you're looking at just qualifying for your typical down payment assistance programs, it can go as low as 500, 550s we've seen. Here's the caution that I tell all the folks that we work with. The higher your credit score, the lower your interest rate. So sure, you can qualify to buy with a 500 credit score, but you're not going to like that interest rate. That interest rate is going to make your payment that much higher. And you can always refinance down the road as, prices improve, credit gets better, things of that nature. But that first interest rate is going to be a shocker. So keep that in mind. The higher your credit score, the lower your interest rate. You can buy with a 500, but try to push that to about a 640. If you can get to a 720, I mean, you're really going to get what's we consider like the best rates out there. So that's what I would say when it comes to what's the minimum credit score you need in order to buy a home. The second question that we got is, can I buy a home if I'm working for myself or working multiple jobs? And so this all comes down to income stability. From a loan officer and lender perspective, they want to make sure that your income is stable. And what they mean by that is that you're taking on a 30-year debt traditionally, and we want to make sure that you're able to pay that debt for the next 30 years. Now, there's no way to guarantee that for sure, but the more stability you have, the easier it is for you to qualify. So, unfortunately, with our entrepreneurs who are out there, it will be a little bit tougher for you to buy your first home. I'm not going to lie to you, but it is possible. So, typically, what they're looking for from people who are self-employed, they want to look at multiple years of tax returns, and then they're going to look at your bank statements. So, keep a clean file, keep your bank statements clean, separate your personal and business expenses. When you're writing off your expenses on your taxes, it can hurt you because the benefit of being self-employed is you get to write off all these expenses and then the rest is what you're actually taxed on. However, what that does from a lender perspective is you're writing off all these expenses and that leftover is your actual income. So they divide that by 12 and that's your income. So how do you qualify for a mortgage if that income is very low? So keep that in mind. If you're looking to buy your first home, you may not be able to write everything off for at least 2 years of those tax returns because you need to show the income that you're making. And that way you can qualify to actually pay that mortgage. So, talk with the loan officer early. Look at how you wrote off your taxes last year. Talk to your CPA or, your tax preparer and find out, let them know, hey, I'm looking to buy a house and here's what I want to do. I need to, show my income at a minimum of this amount. What do I need to do differently on these taxes so I don't write everything off and it looks like I made no money. So, keep that in mind when you're thinking about buying a home as a entrepreneur, self-employed. Now, when it comes to multiple jobs, what they're looking for there, because a lot of people, might have a second job or whatever the case may be, they're going to only include that income if you've been working there for at least 2 years. So again, it's stability. So if you have a part-time job, second job, whatever the case may be, you need to show 2 years of history so that way they can take that income. If it fluctuates, they're going to average it out, divide it by 12, and they're going to figure out what they can include as monthly income. But if you just took on a second job 3 months ago, they're not going to be able to include that income. You're going to need to show some stability and longevity there before they can average that income and give you some value for it. So multiple job situations a little bit different. Yes, you need to show some history there, and you need to show that it's going to continue on. So those are the biggest things. Oftentimes they'll require like a letter of explanation or something like that in order to show that you took on this job, you've had it for 2 years, it's going to continue long after you close on your home. So their job really and what they're trying to manage is the risk. And so from their perspective, entrepreneurs are more risky to them. And so are folks who have second jobs, second, third jobs, whatever the case may be. So keep that in mind. But you absolutely can buy a home. To answer the question, you can buy a home. You just need to have your paperwork in order. You need to show the stability of income, and you need to make sure that you're not writing everything off and taking your income all the way down so you can't qualify to buy. So keep that in mind. Those were the 2 questions that I wanted to cover today. If you have any additional questions, feel free to send us a direct message on any of our social media channels. You can also email us at contact@homeownerprep.org, and maybe we'll be able to answer one of your questions on our broadcast as well. But that's it. That's all that I have for today's episode. Be sure to subscribe, follow us on social media, and if you are interested in the Future Homeowner Academy, which is our online community of aspiring homeowners, you can visit futurehomeowneracademy.com and join the waitlist today. Until the next episode, be blessed.
The Future Homeowner Show. Yeah, we taught that first key glow. Let's go, let's go. Yeah, savings on the table, dreams in the frame. First time buyer, we know your name. Credit down payment, what's in the plan? We make it clear so you understand. Take a breath, we got you, one step at a time. No pressure, just truth. Now lean in, hear the voice. Your home starts here with the right choice. The Future Homeowner Show, we break it down. The Future Homeowner Show, from start to close.